Hi there, welcome to Market Call. Kim Bolton is our guest, and he is president and portfolio manager at Black Swan Dexteritas, and you got it. He's taking your questions on technology stocks. 1-855-326-6266. Send an email to marketcall@bnnbloomberg.ca. We will get to our guest in a moment, but first, here are the big stories we're bringing you from the BNN Bloomberg newsroom. Shares in Lululemon have jumped after the maker of athletic and leisure wear beat earnings expectations in its latest quarter and also gave a better than expected full-year forecast. Sales at stores open for at least a year rose 27% versus the same period a year earlier. Now, inventories rose by 50%, but that was less than the 85% jump in the previous quarter. Dollarama is boosting its dividend by 28% after the retailer topped earnings expectations in its latest quarter. Sales jumped 20% and profit topped $261 million. Looking ahead, Dollarama says it expects to gain from strong demand for its lower-priced items as consumers face inflation. One stock being affected by the federal budget is goeasy. It's trading lower after the Fed's announced plans to cap allowable loan rates at an annual percentage of 35%. goeasy provides a variety of financial services, but its big part of its business is so-called payday loans, which often have a high interest rate. And there is the TSX. It is hanging in today. Let's check in on the U.S. markets. And you can see they too are holding in today. We're going to have a look now at that one-year chart for the S&P 500 because Kim Bolton is our guest today. And Kim, you say that the market is in an interesting position right now, trapped between one short-term moving average and a long-term moving average.
Yep. Between the 50 and 200. Although this morning it just sort of broke above that 50-day moving average. So, but it's done that before. It's quite an inflection point right now, but it looks like we're going to have a decent run.
So you say that in the near term, there's a case to be made that stocks go up perhaps 6 or 7%. However, you think in the longer term, the market doesn't really have a direction?
Well, I think you can make the case that, if you go out into the latter part of the third quarter, fourth quarter, that you're going to have this financial tightening, and it's going to weigh on the multiples, and therefore you'll probably have an earnings recession going into the fourth quarter in the beginning of 2024. What that means to the market, it depends where the market is when we get there.
Okay, right. Now, we are looking at earnings season. We're moving into it. And for this quarter, for Q1, earnings expected, U.S. earnings down about 9% from a year earlier.
9% in this coming, well, for the Q1.
Yeah.
For Q4, it was down like 5.5%. So, there is a trend going on there. And then revenue should be modestly higher, sort of 1.5% to 2%. But I think, when you pull all the technicals and the fundamentals together with what the Fed and the central banks are doing, it certainly feels like we're going to be entering a pause period, at least for the Federal Reserve, very similar to that which the Bank of Canada paused on. And that would give a green light for investors to come in and put some money to work.
What about the cracks that some people say are emerging in the financial system after this huge run-up in interest rates? For example, Darren Sissons yesterday told us there's been 4 breakdowns in the system, including Signature Bank, Silicon Valley Bank, etc.
There's always going to be cracks out there. And, I wouldn't be surprised if we have some other nasty bank crises, because look at the United States. It's got 5,000 banks versus here where you've got less than 20, right? And then you go over into Europe. So, the probability, the odds are that you will probably have some problems down in the States.
Kim Bolton is our guest today. He's portfolio manager and president at Black Swan Dexteritas, and technology stocks are on the menu. 1-855-326-6266. We have an email from Anu. Can your guest throw some light on Sonos? So they're the crowd that hook up your home for music, in my experience.
Yeah, they're the ones. They design, develop, manufacture multi-room wireless portable audio products, right? When you think about that, to me, it sounds very like purchases of discretionary audio equipment. So if we happen to go into a recession, there could be a problem right there. So currently trading just shy of $19. The average analyst out there has a 12-month price target of 23.25. So, you know, the runway is decent. You know, so you could buy it here, maybe down around 18.20, and then down around 17.25.
It was an interesting story. Back in the start of 2020, apparently their customers were outraged over a decision to end updates for older equipment. I think they felt abandoned. It's sort of interesting, isn't it? You buy equipment these days, but it's not just like buying a toaster. It needs to be nurtured, and if the company walks away, you could be in trouble.
Yeah, and you can't get the updates. And not only like the software updates, but even the security updates, right?
Okay, yeah. Now, I don't know if they ever backed down on that one, but it is an interesting thing to think about, isn't it?
Yeah.
You can just be cut adrift. Yeah. So, sorry, what was your view on this? The stock down about 60% in 5 years. Would you be a buyer?
Of Sonos? We don't buy it. We certainly follow it, but it's that issue about it being discretionary buy, right?
Yeah.
And in these times of uncertainty and potentially a recession around the corner, that could cause some problems. Yeah.
We have an email from Norman. I'd appreciate your thoughts on Kraken Robotics. I love that name. Can you remind us what they do?
Yeah, so Kraken, it's actually out of Newfoundland. And so it designs, manufactures, sells software-centric sensors, batteries, and underwater robotic systems, right? Mm-hmm. So a lot of military, government, research companies would go to Kraken to actually buy their hardware, software, to go down to put them down into the water, and actually, you know, even for mining companies for searching the floors and doing some exploration. So currently trading. It's a very liquid stock, and but it's probably, we don't own it, we follow it. Currently trading right around 52 cents. Now, the average analyst out there has a 12-month price target of 96 cents, so it's almost a double from here. So, yeah, they have two segments. They have the sensor side, and then they have the power. And it's mainly for sort of underwater digitaling and vision and underwater vehicles. When they recently got, I forget, it was a military contract for $1.2 million
from the U.S. 1.5 from the U.S. defense customer.
Right. So every time that happens, every time they get, you know, it's a small company. It's got a market cap of $103 million dollars. So every time it gets like $1 million or $2 million deal, it'll pop. So I think you could probably buy it right around here, maybe add to it down at around 52 and around, buy it here around 52, add to it around 45, and then back down to around 40.
Apparently, this latest one is to help people snoop around shallow and deep water installations. Yeah, some kind of sonar product. Benjamin in Chilliwack, BC. Go ahead, please. I don't hear Benjamin, but questions about Palo Alto, the giant player in cybersecurity.
We really like Palo Alto. We own it. We've trimmed it lately, as with a lot of our stocks, because they're starting to approach like within 10% of price target. You've had a decent run as people sort of project forward that this pause was going to come with the central banks. And so Palo Alto has done very, very well. I would say one of the advantages of Palo Alto is that currently trading, just around $191. We have a 12-month price target of $217. One of the benefits, and it's sort of the best part about Palo Alto, is that it covers all of the security spectrum. So it's not just sort of firewalls or endpoint. It has a full basket. And so, cybersecurity has been very, very important for large enterprises. Now, sort of the medium-sized, smaller companies recognize that they need to have some security on their website, within their systems. And Palo Alto actually services the whole spectrum from small, mid to large size. And so they've really sort of carved out that sort of small to medium size that actually now has an appetite going into this. So I think you could buy it here right around 191 and then maybe add to it down around 180 and then around 170. And it shouldn't go under 168.
Oh, okay. Just incidentally, I was just reminded of something when we were talking about stuff underwater. Reuters had a great story this week talking about these subsea cables that carry the world's data. Now central, they say, to the US-China tech war. And apparently the Americans have been thwarting Chinese cable projects, and they have choked big technology cable routes to Hong Kong. So that's another proxy battlefield between America and China right now, these big cables.
Absolutely. Everything's interlinked, right? And if anyone doesn't play and want to play with the rules and play with the rest of the teams, it becomes quite an issue.
Kim Bolton is our guest, president and portfolio manager at Black Swan Dexteritas. He's taking your questions on technology stocks. Rick in Calgary, go ahead, please.
Hi, my question for Kim is on Aptiv. They make electronic parts for automobiles. I believe they're based in Britain. I'm just wondering what Kim's thoughts were on that company.
Aptiv. Okay, thanks a lot.
Yep. Thanks, Rick. There's some feedback here.
Yeah. Okay, we'll get that fixed. Carry on.
So it does Aptiv. It was actually spun out of the old Delphi, remember?
Oh, yeah.
And so Aptiv, that section of that business unit, it designs, manufactures, and sells vehicle components worldwide. Currently trading right around 109. And we have a price target in here of 138, a 12-month price target. It's a big company. It's about a $30 billion company. It provides electrical and electronic and safety technology solutions, particular to the automotive and commercial vehicle segments. It operates through two segments. One is the signal and power, and then there's the advanced safety and user experience. So it's a hardware add-on for the software. It's over the last 100 days, it's up about 16%. So we don't own it. We can only own so many, but currently trading around that 109, 138 price target, so you could buy it here. We'd recommend adding to it down around 102.5, and if it happens to go under 100, pick up some more then.
They say we're enabling the transition to software-defined vehicles. I don't know. Is that partly a racket just to make vehicles impossible to fix unless you go back to the dealer?
Well, you know, if you listen to Elon Musk and also to the Apple folks and so on, they always refer to vehicles as being computers on wheels, right?
Yeah.
And so you have some hardware, and then you just sort of upgrade it with the software, and so that's why everyone calls them software on wheels.
Right. Because we've heard the neighborhood mechanic is being squeezed out of business.
Yeah. And think about it, you know, vehicles, the hardware side can, if it's maintained properly, actually has a long runway. My son, he has a pickup truck, and he just went over 250,000 miles. Figures he can probably get another 300 on top of that. So the hardware side has a long lifespan, and the way you keep it current with all the other vehicles on the road is through the software.
Right. I mean, it is amazing when you've got radar on your car and all kinds of warnings.
Oh, the sensors. Yeah. This is where the likes of, Texas Instruments. I always say that, instead of trying to pick the winner of the hardware side, there are so many on the software side that have a much better margin in it. So when it comes to electric vehicles, we always recommend, buy a Texas Instruments, buy a Qualcomm that does the CPUs and the GPUs.
Yeah.
And that's where they're making hay. So, instead of actually trying to figure out who's going to be the big winner, right? And who would have thought? Who would have thought that someone like it was just announced yesterday, Lucid laid off 25% of their workers.
The electric vehicle maker. Yeah, that's right. Peter's in Vancouver. Go ahead, please.
Thank you.
Hey.
As usual, great show.
Thank you.
Great host and great guest. Tech Guru, Kim, Chris, PLTR. Great quarter, went up to 10, now back to 8. You keep it at 6 in December. Thank you very much. Buy, sell, or hold.
Palantir.
Yep. Good to hear your voice there, Peter. Currently, Palantir trading right around just above $8. It's interesting, so many of these analysts have got this wrong, and so they continue to ratchet down their price targets. For us, we really don't see it going north of $10, but still, that's a decent runway. So just to remind everyone, Palantir provides sort of two data analyticals platforms. One is Gotham, and that's more geared toward the government side of things, and then the Foundry, which is geared more toward enterprise and commercial side. When you listen to the Palantir management talk about it, the total addressable market is massive. They talk about $110 to $120 billion. Now, they do have some sort of issues. They have high concentration of customers. 61% of the revenue comes from the top 20. The average revenue per top 20 customers is about $35 million. But it's pretty sticky. They continue to sign up new clients. They just signed up 7 new contracts since November. And I think they've really sort of put it behind them because for Palantir, they're really known to be the place when it comes to data analytics, artificial intelligence out of the valley. So they attract a lot of great talent. But the way they actually attract them is through stock compensation. And so when they came out and they actually did the listing, they had all of these stock compensations that were just sort of sitting above the marketplace. And so that's why it's sort of, it started out in the high teens, went all the way up to about 29. We participated in that part just after the listing, which would have to be like 3 years ago, I guess. But we haven't really touched it since it's come down because there's this controversy about the stock options.
Oh, what, compensation?
Yeah. So that, to attract the talent that they need to be front of the line in data analytics and artificial intelligence, they have to issue these stock options. And so, you know, people start to cash them in, and it puts a lid on the stock price. That seems to have sort of gone away, but it's just going to take a while. It's a great company. They are the king when it comes to data analytics and artificial intelligence.
Didn't somebody at Google say that the best software engineers are not 100 times more productive or 1,000 times, but 10,000 times?
Yeah. Actually, one of our analysts is in the Valley, Yuri. He's actually the chief of cybersecurity for Alibaba Cloud. And so I talk to him every Friday, and I call him our analyst, but basically he tells us where the talent is going. And if you can follow the talent in the Valley, you can figure out who's sort of doing what and what they're working behind. And it's interesting. Well, Yuri actually came from Russia. Isn't that interesting, right? A Russian software engineer that went sort of to the NASA school in Russia is now working for a Chinese company in California.
That's pretty global. Okay.
Yeah.
Walter in Hamilton, Ontario. Go ahead, please.
Good afternoon, gentlemen.
Hi there.
With a recession on the horizon, Accenture in the 270s, fair value or overpriced? Thank you.
Thank you.
I had the great opportunity back in the end of October, beginning of November, when I was at the Gartner conference, that I met and had a meeting with Julie Sweet, who is the CEO of Accenture. An amazing company, currently trading right around that sort of 275. It's pretty well priced because we have a price target of $315. But Accenture, just to back up, so it's an IT consulting and outsourcing powerhouse. So they compete with the likes of like a Deloitte, where they bring in consultants, or McKinsey, and they actually get them to talk to the companies about how to digitalize, or what to do in cybersecurity, or what to do in metaverse. Anyway, one of the very coolest parts about Accenture and chatting with this Julie Sweet, they have very much embraced the metaverse. And, you know, granted, just sort of coming out of the pandemic, but they have 225,000 people on the payroll around the world. Mind you, they just laid off, I think it was around 15,000. Of those 225,000, they have 500 in the leadership group. And they don't have a head office. Their head office is in the metaverse. And so everyone sort of meets online in their own metaverse.
Little avatars.
Yeah, as avatars. They all build up their own avatars. And so they very, very much embraced, you know, sort of the whole digitalization, automation, and so they really sort of walk the talk, right, with their clients. So really like the company. We still have about a 1% position in this. We did have it up around 3.5, but as it approaches that price target, we just start to trim it off.
I heard years ago from somebody in the consulting business that sometimes the CEO or chairperson of a company is older, feels uncomfortable about IT, and the IT department comes to them and says, oh, we've got to spend tens of millions on this. So they hire a consultant because at least they'll have another voice. Because, I mean, who can stand up to these IT guys, you know?
Yeah, but the consultants just have their hands in your pocket a lot.
There's that. There's that. Yeah, as taxpayers, we've been finding out about that. Yeah. Okay, we're going to have a look at Kim's past picks when we return. So Kim was on our show April 19th of last year. His first idea was Microsoft. Let's have a look at how Microsoft has done. Pretty flat over the period.
That's a pretty good result.
Yeah, could be a lot worse. That's right. Yeah, yeah.
Yeah, this is Microsoft is still on our top 5. Currently trading right around that sort of 280 level. It's done so well, and it's still in the top 5, so that meant we had probably around 5.5%, 6%, and we've sort of trimmed it just a little bit. So it's back down to about 3.5 because we have a 12-month price target of $290, which is only $10 away. However, the reason we're hanging in there is that we're going now into the earnings season, and everyone's going to change their whole sort of earnings side of things.
Yeah.
And there's a lot of interesting moving parts that are going on with Microsoft. For example, with Activision Blizzard, right? So back, oh gosh, it's almost about a year ago. Well, it would have been last summer that Microsoft said that they wanted to buy Activision Blizzard. And remember, Activision Blizzard is the one that has the Call of Duty, World of Warcraft, Diablo, Candy Crush, and so on. And there was all concern about the antitrust side.
Yeah.
You can watch it on the Activision Blizzard side that, it started to gradually move up toward that. I think the price, the acquisition price is $94, $95. And so I think it will happen. Everyone's worried about the antitrust, monopoly, and so on, but it's still going to make them the 3rd largest gaming company in the world, behind that of China's Tencent and also Sony. But then, they have so many other horses in the race. They've got Azure, which is the 2nd fastest growing cloud company out there. It has, so that's sort of on the cloud side. On the productivity and business processing side, they have the Office. They've got Microsoft Teams, and then even into Outlook.com and LinkedIn. It's amazing how many horses they have in this race. And then in the intelligent cloud side, they also have Visual Studio, System Center. They have GitHub, which is the AI side, and their earnings actually have been very, very decent. And so I think, and then finally you have the Chat GPT that came out.
Yeah.
It made
or Sydney, should we call it? Sorry, go on.
So, they've been invested in OpenAI since 2019. So this isn't new to them, but they just popped up another $10 billion to go into it. And they recognize that probably Google, with Lambda behind it, their language, is the leader. But they're just trying to carve out that sort of 2nd place, very much sort of similar to the Azure with AWS. Right?
Okay.
So I'd buy it here. If it goes down toward 265, I'd buy some more, and down at 250. And it's had a decent run. Over the last 100 days, it's up 15%. Over the last 30 days, it's up 13%. So we still like it.
Okay. Adobe was your next idea. Let's see how that one did. A stalwart in business. This one down.
It's interesting, Andrew, when this morning the analysts were just sort of going through and giving me an update when it comes to how they're doing with the Figma. Figma, they went out and they were going to buy Figma. The deal is still sort of semi-alive. Funny in that when you go to the Department of Justice and ask them about the status of the antitrust filing against Adobe on this Figma, they said, well, before you actually see our files, could you please download Adobe?
No.
So
that's how ubiquitous it is.
Yeah. Well, and Adobe, not many companies around actually have a verb on their shelf, which is Photoshop.
Yes, yeah, that's true.
So I think that they'll probably get the Figma come in, although they just launched this artificial intelligence, a new family of creative and generative AI models in a module called Firefly. So they're sort of hedging their side. If the Figma doesn't happen, they're still going to have Firefly. It's had a decent run. We really, really like it. So pick it up here around that 375, down at around add to it around 355, and then down around 335.
Let's have a look at your last idea. Qualcomm, huge holder of intellectual property, among other things.
Yeah. Not only intellectual properties, but they are the king when it comes to the CPUs, the central processing units, and the graphic processing units. Now they're a designer, and so they're a fabulous chip maker. But the industries that they actually service with these chips are into the likes of 5G. They're a leader in that. They're a leader in automotive and also in Internet of Things. Now, mind you, everyone knows that, come 2025, they were supplying the chips to Apple for their iPhones. In 2025, Apple has announced that they're going to be actually using their own chips. So they're going to lose that. So very smartly, they transitioned and they started to build up their automotive and their IoT side of the chips. And, their recent, back in February 2nd, when they reported, the revenue was down 12%, net income was down 33%, but the new horses in the race on the automotive and also on the IoT actually rose to the surface. And so that's why the stock has actually performed pretty well. So currently right now, sitting right around right around 125. We have a 12-month price target of 145. And so we still own it.
You're sticking with it.
Yeah, absolutely.
I mean, they seem to just have nothing's impregnable, but really an entrenched position in the center of the tech industry.
But when they saw that they were going to lose the contract to Apple, they had been working well in advance to actually be a leader when it comes to chip supplying into the automotive. And think about all the chips that go into cars and vehicles around the world. And then recently they acquired a company called Nuvia, which is really sort of reinvigorates current lines with other smartphone providers, also into Windows PC. And Nuvia actually had a lot of automotive clients, and it panned into them too.
We're getting just some headlines on monetary policy. Tony Gravel, Deputy Governor of the Bank of Canada, saying in a speech, the bank is, quote, ready to act should market-wide stress emerge. And the reference here is to the banking to and fro, to pretty significant banks in the States failing in the past few weeks. Gravel saying global banks are more resilient than they were 15 years ago. But this is interesting. I'm not sure exactly what he's getting at here, but fallout from the global bank turmoil will factor into the bank's next report, perhaps indicating that the bank sees this as a potential economic threat, which presumably would incline it not to resume increasing interest rates. And there is the bank's ETF today. Of course, the government is going ahead with for example, a tax measure that will close off a loophole whereby banks have been able to receive dividends from Canadian companies with tax advantages. Kim Bolton is our guest today. He's taking your questions on technology stocks. We'll be right back.
The banks start to report.
We have Dave in Edmonton on the line. Go ahead, Dave.
Thank you for taking my call.
Pleasure.
I want your opinion on Tesla, and do you think that if we enter a recession, do you think we're going to be able to see those lows in January?
Sorry, what was that last thing, Dave? I didn't hear.
Oh, I
I'm
see.
sure.
Dave, if I understand, thank you very much for your call. Dave, if I understand correctly, you were saying if we go into a recession, are we going to revisit the lows that were back in January? The way we look at it is that there is a potential for a recession, but that's only going to come when you have more of a financial or credit tightening that's going on. And I think that credit tightening is not going to happen until, at the soonest, the third quarter of this year. So we actually think if you're going to have a recession, it's going to be later in the third quarter, maybe into the fourth quarter. But it makes sense, right? Because it was only a year ago that they started raising rates.
Yeah.
And so if you listen to a lot of the economists, for it to actually filter through the market, it has to go on for about a year and a half.
Big latency. Latency, that's what you guys say. Yeah. We better move on. What about Tesla?
Okay, so Tesla, sorry. Currently trading at about $190. It's really difficult to put a price target on this. So I always approach Tesla as being more of a trading stock rather than, here it is, it's $193 and it's already through our price target. So it's more of a trading stock. So, you know, we'd buy it if it goes down toward 175, 165. Yeah.
But, okay, so not calling to you right now. Thanks for that question, Dave. Andre in Chilliwack, BC, go ahead, please.
Oh, good morning, Andrew. I'm glad the two of you are having a wonderful show today.
Thank you.
Be very relaxed.
Thank you. Go ahead. Sorry, Andrew.
Oh, that's okay. Mr. Bolton, could I get your thoughts, please, on Broadcom for 12 months? What do you and Yuri think Broadcom is heading to? And maybe you could update us on the acquisition that they're trying to take over. Thank you very much, and have a great day, you guys.
Broadcom, you got it. Thanks.
Yeah. So Broadcom goes under the symbol of
AVGO. It's a tough one.
Yeah, that they bought into. So again, this is another one that is very fairly priced, sort of sitting around that 626. The average analyst out there has their price targets right around that sort of 640 to 650. But you know, I would actually wait on this going in. I'd wait on it until they actually do the reporting. You know, when they reported last time back on December 8th of 2022, they announced $10.45 on the earnings, which was 95 cents better. So they beat on the top, beat on the bottom, and they actually gave better guidance, and so that's why they continue to go. So I would actually wait for it to get back toward that sort of 600 level, and maybe if you can get it down to around 575.
Oh, okay, so not screaming to you right now.
It's fairly priced. Yeah.
Fairly priced. Kim Bolton is taking your questions on Tech Stocks, 1-855-326-6266. Gulam is on the line from Toronto. Got some ETFs on his mind. Go ahead, please.
Hi, good afternoon. About a year ago, I made investments in about three technology areas: the ZQQ, the SOXX, and the famous Cathy Woods EARK. And I'm not doing too well on that, so I've given up. I'm thinking of adding to a small position in the SOXX and ZQQ. Do you see any upside on that, or should I not be doing that at the moment? I'd just like to have your opinion. Thank you so much.
Thanks, Gula. ZQQ, that's the Canadian dollar hedged triple
It is,
Q,
yeah.
right?
It's a NASDAQ 100 ETF hedged to Canadian dollar.
Which, Gulam, that was a good idea. a year ago, because a year ago,
yes,
Canadian dollar was, well, dollar Canada was sitting at around 127. Now it's up around, what, 136? So that was a good call, Gulam. But I almost think that, you know, the Canadian dollar is going to work its way back up, the U.S. dollar down. I don't think it's going to go all the way back to 127, but I don't think it's going to go above 138. So, Gulam, if you're going to add, actually, if you're going to add to the ZQQ, I just do the straight QQQ. Now, the SOX, that's the Philadelphia Semiconductor. You know, the SOX is like today's transport index, right? That's what runs everything around us. Are the semiconductors. I always, when I participate in these ETFs, I do it a third on the way in and also on the way out. So that's what I'd recommend to you. I'd stick with both of them, but maybe if you're going to add, instead of the ZQQ, I just do straight QQQ.
Okay, we are out of time. We're going to have top picks from Kim Bolton after this. Okay, we're tight for time. Equinix is Kim's first idea. What do they do, Kim? Why do you like them?
So this is the king of all data center REITs. We were just talking about REITs, right?
Yeah.
A phenomenal company. It's been around for ages. It's amazing, Andy, when you think about it. So they are the picks and shovels when it comes to the AI side. So AI is all about data, and you got to store the data. And Equinix is the biggest data center in the world. And we know that because it's right around 40 to 45% of AWS, Azure, Google, all the big cloud companies use Equinix to store their data.
Okay.
So there's this relentless growth in cloud, 25% CAGR, secular growth still in the early innings. You know, Equinix has great scale, which gives them a competitive advantage. Currently traded around 681. We have a 12-month price target of 795.
Okay, you like the look of that one. Cisco Systems, a venerable name in tech.
Yeah, and so we've owned this for quite a while, and certainly as we've gone through recently, well, in their last reporting, you know, they've beaten the top, beaten the bottom, extended their guidance, currently trading right around $51. We have a 12-month price target of $60.50, so it still has a decent runway ahead of it. Just to remember, you know, they do a lot of infrastructure platforms, so it's a lot of hardware, switching, routing, wireless, and so on. Yeah.
And a big name in security, cybersecurity, Checkpoint.
Yeah. So this, you know, Checkpoint, it's an Israeli company, and one of our analysts, Alex, works in Israel, and so we have the great fortune of actually knowing these people pretty well at Checkpoint Software. So it's an IT security solutions provider, focusing in on network security, endpoint security, mobile security, security management. They've been there for quite a while. They sort of went through a period during last year where they were sort of resting on their laurels. There was a change in management. They've upped their game. Really like these guys. Waiting for that new management group to come in. Currently trading right around 128. We have a 12-month price target of $151.50.
Oh, okay.
If I can just add, Andy, I know I missed a few names. People were calling in that were asking about Marvel and Snowflake and Fortinet and so on. Please reach out to us. Kim at blackswandexteritas.com, and we'll send over the research reports to you.
Nice. So then just go to the website, blackswandexteritas.com as well, and there's a contact button, I guess. Yeah. Good stuff. Okay. I don't know how much time we have left. Have you had much fun? Have you had much fun with the AI chatbots yet? Have you had a chance to try them out?
Absolutely. It's a phenomenal product that is just going to change our world. I know everyone says this, but it does. I use ChatGPT at least half a dozen times a day.
Oh, my goodness.
Yeah. Now, mind you, I had to get my analyst to actually show me a few months ago, but I remember Andy actually being here last fall, and we were talking about generative AI. And now it's the big flavor. Just as a plug, you know, if you want a stock to actually play in that, a winner would be Google. I still think Google, even though Microsoft has come out.
Sure.
Google is the one.
Google is a huge, they're not going to give up their franchise in that.
Yeah.
Kim, I'm loving it. Yeah, I've only scraped the surface. Yeah, it's exciting times. Thanks very much indeed.
Thanks, Andy.
Kim Bolton. So thanks very much indeed for watching Market Call. Remember, we're going to be talking real estate with Andrew Moffs. We've seen major selling in some of the big office REITs in the States. Apparently, the hedge funds are betting against them using credit derivatives, etc. I'm dying to hear what Andrew Moffs has to say about the future for office properties. Thanks for watching Market Call. Have a great day in the markets.